Hello everyone, I hope you're okay. Let's start our topic for today is divergence, RSI divergence. So as you probably already know, let me remove this. Right, with that, how to put RSI on the chart. This is a standard gold chart on IC markets. And to put a RSI on your chart, I I already have RSI. So but just to show you how to put it, just go to this indicator metrics and strategies tab here, and then you put here, right here, RSI, relative strength index. Click on that, and you will have RSI, as the one I have before. But I have removed this moving average, yellow moving average. So all you have to do is go on style and remove RSI based MA. So that will be removed. And click OK. That's it. But I already have RSI above, so I don't need to do that. So I'll delete this one. I don't need it. So the topic is RSI divergence. And RSI divergence, how it works. There are two main types of RSI divergence. One is the regular divergence. Let me open my hand tab and I'll explain to you. So we've got regular divergence, and then we got hidden. So there are two types of RSI divergence. So that's the basic thing. And the regular RSI divergence is used. The regular one is used to spot out reversals, and hidden is used in the direction of trend. So these are two basic. And then you can further divide these both bullish and bearish. So regular bearish and regular bullish, and hidden regular and hidden bearish and hidden bullish. Previously, I did make video, but it was not very detailed. So there was still some confusion. People were asking. So this video is more detailed, and I'll give you examples as well in this video. Right, so let's start. So this is RSI, and regular, as I said, regular RSI divergence will spot out any any uh, uh, reversals. That's regular divergence. So if the market is going and is around this, its oversold region around 70, or is it under 30? This is 30 region, and this is 70. So market is under here. RSI, our RSI is here. When it's overbought, over 70, then we'll look for reversal from here. But how we look for it, I'll explain to you in a minute how we do that. So in this case, as you can see, we have a divergence here, have we? Look, market is on above 70. So it has to be above 70 for the bearish setup, and are above below 730 for bullish setup. Here we didn't have as divergence. Let me explain to you. We have right. In here, we didn't have any divergence, but here, look, we have divergence here. Market going to the upside, RSI going to the downside, and break of this, we have a sell trade, although it's not up to this level here. Although it's not very much profit here, but because this divergence is showing reversal here, we had some movement. And you can always go to smaller time frame and look at the candlestick patterns. And usually when the market is going below 50 and you have some moving average setup, you can use crossover moving averages, 10 or 20. Then with divergence, it will be confirmed, because without confirmation, it's best not to take trade, because divergence only works better if you have uh, confirmation. So look at this. I'm trying to put this EMA, but for some reason it's not working. EMA 20. Yes, now it is. So look here, 1 hour. Here we are a crossover to the downside, and it is below 50 as well. And the divergence was showing here, so that's a confirmed trade. Also, you can use different structure levels as well, because in this case, we didn't have any all-time high. This was all-time high, and we didn't have previous structure level here. But because this level was broken here, and if you go in the smaller time frame, what is showing, the smaller time frame is showing as well that the market can come down here. Look, it's already come down from here using, if you use the method I told you, moving averages, crossover, and the RSI below 50, smaller time frame. So you can, in fact, have two trades here. One on the basis of the moving average crossover and RSI below 50, and other one, 1 hour divergence, regular divergence. But you have to manage the risk. Just that one simple example I have given you. We can always look for further examples, and we can explore the market again and again. So it's always best to look for confirmations, as I said. Now let's look for further examples. This is our sold zone. Oh, sorry, our bought zone. And this is market at our bar zone. And look, we have this good candle pattern here, and we can expect the market coming down as the divergence shows as well. But what we have to do, we have to, if you go to smaller time frame, see what kind of evidence we get here. You can go 15 minutes or half an hour. Things will be more clear. See on here, there's crossover and moving and crossover as well as the RSI below 50. So that's a very good trade as well. That was the buy example, but now let's look for the sell examples. Now look for buy example which is oversold zone, and this is 30 minutes, and let's see the divergence. See there, RSI going to the upside. Here, market is going to the upside as well. As you can see, and we have crossover here. Also, it's above 50 as well. The market is above 50 as well. So that's by example. This is how you can use divergence. Similarly, we have another example here. We have another example here, and also if you use liquidity sweep, that's very good example here. We have liquidity sweep as well, and I mean you can use structure levels as well, candlestick patterns. There are different ways of confirming. If the RSI doesn't confirm, or moving average sometime may not confirm it. So you can always look in gold. We can even have a smaller time frame as well. RSI down and market is to the downside. But we have to look for some sort of confirmation here. Possibly if we can find something like that, that'd be better. Because although there's a structure level here, I will go on smaller times to see what's happening. In 5 minutes, it's still not crossed the 50. Looking at the 1 hour time frame, looks like market can come down further. So it doesn't seem very good situation at the moment for a buy trade. This is good example. The reason being, this was a structure level and moving averages as well, and the crossover here. And RSI above 50 as well here. And then we have liquidity sweep as well. But that was a very good trade. The first trade was here. Then once we have taken some profit, 35 to 49, that was a lot of pips. And then once we take profit here, break even the trade, rest of the trade, and then from here we had another trade, and look where the market went. So this is how you use divergence. Here we have divergence. For divergence, there should be at least minimum 2 legs for the divergence to happen. And look, that here was another divergence here as well. So in gold, we are finding very good examples. Here was a divergence as well. although they both go in the same direction, but look where the market took liquidity here. And then when the RSI above 50, and there's a crossover as well. So you can use this as a divergence, confirmed divergence as well. So there's a lot of examples. So now second example would be the hidden divergence. So hidden divergence used between 30 and 70, and that's in the direction of trend. So I'll keep in the chart in 15 minutes. So it's, sorry, in the opposite direction of the trend, hidden divergence. So that was regular in the direction of the trend, but I mean reversals. And sorry, and now the hidden divergence, sorry, yeah, hidden divergence is in the direction of trend. So here 15 minutes where we have a bearish trend. So bearish trend looking for reversals. See, this area has been broken as a break of structure. And now if we look for divergence, see what we can get here. So RSI going to the upside, market is coming to the downside, and look here, we have divergence. That's a sell. So 50-minute is to the downside, and RSI going to the upside, and then market comes down. So it can be confusing, but if you do a lot of practice and use confirmations, there's no problem with it. So here, see, market is going to the upside, RSI going to the downside, but then it moves in the direction of RSI, the market. And then market, all the bullish, this is bullish trade because it's in the direction of trend. Although RSI, so it is still in the direction of trend. Here, look. Let's see if we have a divergence because some divergences don't work. So that's why we use confirmation. And then it's above 50 as well. And if you don't want to trade this, you can trade a crossover here for further confirmation. So this is another example. Although there is no crossover, but ours about 50 as in the direction of the trend. There are so many examples, on and on we can go. This is another example. This bullish candle, what it shows? It shows that possibly market to the upside. And market did go upside, and also this is a confirmation, and there's a crossover as well. So I hope this is helpful, and if you want me to make more videos, please do comment, and any particular video you want me to make, please do write some suggestions. Okay, I hope this is helpful. Thank you very much. Have a good day. Good night. Bye-bye.